The housing market in the Greater Toronto Area saw its best July in 4 years last month. The Toronto Regional Real Estate Board says sales rose close to 11% in July compared with a year earlier. 6,100 properties changed hands, the most activity recorded in the month since 2021. The board says improved affordability driven by lower prices and borrowing costs is starting to translate into increased home sales. The average selling price decreased about 5.5% compared with the year earlier, dropping to just over $1,051,000. Joining me now to explain more about the numbers is Jason Mercer, Chief Market Analyst with the Toronto Regional Real Estate Board. Jason, thanks so much for your time to help break down these numbers. So Toronto saw sales rise in July. What factors do you feel are contributing to this?
Yeah, I think the key factor has been an improvement in affordability over the last year, where we've seen both the average selling price trend lower, as you mentioned in your introduction, and at the same time, borrowers are benefiting from lower interest rates. And so that's translated into lower monthly payments. The great majority of people who are purchasing a home are doing so through the use of a mortgage.
So with the average selling price trending lower by 5.5% compared with last year as well, what do you make of that number? What does it say to you?
Yeah, that just gets back to the relationship between sales and listings. And so while we did see a year-over-year uptick in sales last month, at the same time, we're still seeing, inventory levels remain very high historically. And so that means if you are entering into the marketplace, you're finding that there's a lot of choice out there, which translates into negotiating power. And as a result, we've seen prices continue to trend lower. I think as we look forward into 2026, if sales continue to pick up, we'll start absorbing some of that standing inventory and market conditions will tighten up.
So when you say people are finding affordable options for home ownership, what exactly does that look like?
Well, I mean, if you look at, an average monthly payment, for example, on a $1 million home, let's say in the Greater Toronto Area, at the peak of the interest rate tightening cycle, you're seeing a required income of over $200,000. Now we're seeing that required income has trended, down to sort of the 150 to 140 mark, and so that's a pretty marked change over the last couple of years in terms of who is able to enter the market and sort of access ownership housing within the Greater Toronto Area.
Despite the numbers picking up for Toronto, should people still be cautious with a whole lot of economic uncertainty with the overall Canadian economy?
Yeah, again, I mean, if you look at 6,100 home sales in the GTA for July, that's still well off the peak that we were seeing back in, say, 2021 and the first part of 2022. And I think a lot of that has to do with the economic uncertainty that persists. I mean, if you're working in a sector that's based on exports to the United States, you may still be wondering how things are going to look from an economic and a financial standpoint in the months ahead. And so I think, some certainty on that front over the next few months as we move into the fall would go a long way to boosting confidence and seeing more people move off the sidelines and look at a large ticket purchase like a home.
Jason Mercer is the Chief Market Analyst with the Toronto Regional Real Estate Board. Jason, always appreciate your time. Thanks so much.
Very welcome.